my forecast for gold this year is a high of about 2,500. Silver, I'm looking for maybe a possible touch to 30 or near there. But I think 30, and this is more of a guesstimate than a knowledge-based statement, area is really defended heavily. I mean, if you go back to the start of the silver squeeze movement with Wall Street Silver, it's been some time now. And when we got to the near 30 level, just couldn't push through it. And then Rostam Benham comes out and say they need to tamp down the silver market. Are you kidding me? So blatantly obvious if you pay attention and you're objective minded. And of course, I am biased about silver, but I'm also capable of being objective. I mean, that's a fact. That's what he said. Why would someone associated with the CFTC make a statement like that in public? I'm private, okay, fine, but in public? I think that this year we will see upward pressure probably by the end of the year.
Silver expert DavidMorgan foresees upward pressure on gold and silver prices in the current year, predicting that gold could soar to approximately $2,500 per ounce. In comparison, silver may touch the $30 mark or possibly approach it. This bullish sentiment is echoed by Gregory Shearer, head of base and precious metals strategy at JPMorgan, who expresses confidence in a positive medium-term outlook for both gold and silver throughout 2024 and the first half of 2025, emphasizing the importance of timing for investors. Citigroup analysts also anticipate a notable surge in the value of silver, projecting a potential rise to $30 per unit within the next 6 to 12 months based on the multinational bank's latest assessment of the silver market. Given the current gold-to-silver ratio, Morgan further suggests that purchasing silver might be more advantageous than gold, drawing from historical trends and the prevailing dynamics in the precious metals market. Recent market movements have seen silver rebounding as the gold-silver ratio retreats towards the 89 level, with the pullback of the US dollar providing additional support to silver markets. Notably, the gold-silver ratio peaked at 92 earlier in 2024, prompting significant buying activity in the silver market and driving the ratio back to approximately 88. Morgan explores treating silver as a monetary metal akin to gold, underscoring the differential attention it receives from financial institutions compared to gold, which is highly coveted by central banks and regarded as a mainstream investment. The latest forecast from the Silver Institute projects total industrial demand to surge to a record 690 million ounces in 2024, reflecting a 4% annual increase. This emphasizes the growing industrial significance of silver, particularly in sectors such as technology, renewable energy, and healthcare. Join us as we explore the insights shared by DavidMorgan. Stay updated by subscribing to our channel and activating notifications. Thank you.
Been advantageous for precious metals investors to swap gold into silver above 80, 85. Historically, we're there now. If you're going to enter the market, you're much better if you have patience to buy silver rather than gold at this point. One thing I want to point out that, I lectured on several years ago and was what if silver were treated like gold? And the basis is where is gold? And gold's, pretty much near an all-time high. Why is that? Well, demand. And, we just went through the demand thing, which doesn't make sense with silver. With gold, it sort of does, because gold has been coveted by the central banks in 2022, buying at a 40 or 50-year record. 2023 looks like it's on track to be similar. So far, 2024, we don't have enough data. But central banks have been buying gold. It's money of last resort. They put it on their balance sheet. It's a tier one asset since Basel III. And all these things are favorable to gold. And gold is actually a mainstream investment, even though no one will admit it, because they want to keep it quiet. They don't want the public involved. They certainly don't want gold to go rogue. They want to keep it under their management. However, none of that applies to silver. But if silver were acted or was treated as if it was a monetary metal, and they had to keep a certain ratio of silver to gold, then, of course, there'd be a lot of buying pressure in silver by the banking system. Again, there isn't. There's really no central bank that has any substantive silver, to my knowledge. India used to. None of it was LBMA grade. It was 90%-ish. It wasn't very much, but yet as a monetary asset, not in the banking system, but held by the public and needed by industry to the level that it's needed now, there's still a great deal of demand. And if any pseudo institutions or large money, we could say, pension funds, even a bank, there's nothing to say that the Bank of India wouldn't say, we want silver. We're going to use it as a monetary asset. It's such a precious commodity, and it's in such short supply relative to historical standards. Any significant buying will definitely force the price higher at some point. And I say that at some point is this year. But remember, I used the word significant. If you're able to, through the psychological operations on the monetary system at large, convince people that you need to have a piece of plastic or something on your phone and that digits are the only thing that matters, then perhaps my life's work is going to go out the window. I'm saying that tongue in cheek somewhat, but nonetheless, money is either substance or it's not. Anytime it's been just a legal construct, there's been problems. Whenever it's been specie, there hasn't been nearly as many problems. So coming back to basics is an economics lesson I think is still in our near future.
For the past 2 decades, the prevailing sentiment in commodities circles has been centered around the notion that if you build it, China will buy it. However, signs indicate a shift like China's commodity demand, with trends observed in 2023 likely to persist into the following year. China's gold and silver sales reached a 6-year high, underscoring its enduring influence in the global commodities arena. Morgan underscores China's pivotal role in driving commodity demand, particularly during its rapid industrialization phase. Despite a slowdown in China's growth compared to its peak years, the nation continues to wield significant influence in the global commodities market. In the silver market, a notable deficit of 237.7 million ounces was recorded in 2022, marking the highest supply shortage on record. This deficit and a shortfall of 51.1 million ounces in 2021 effectively wiped out all cumulative surpluses from the previous decade. Projections indicate that the global silver deficit is expected to moderate by 9% to 176 million troy ounces in 2024. Morgan delves into the historical context of the silver market, highlighting the period from 1990 to 2005, characterized by a substantial deficit. During this time, the consumption of above-ground silver inventory outpaced the amount being mined and recycled, contributing to the deficit observed in the market. Let's get back to the interview.
The biggest silver deficit we've ever experienced in my lifetime was from 1990 to 2005 inclusive. In 1990, the above-ground silver supply, and when I say silver, I'm referring to 1,000-ounce commercial bars, was 2 billion ounces. And the average drawdown or deficit, so for supply and demand to equal, they have to come from somewhere. And if you're not mining and recycling as much as demand has, it has to be drawn down from above ground inventory. So from 1990 to 2005, the average drawdown was 100 million ounces a year. And that was 15 consecutive years in a row. And we went from 2 billion ounces above ground supply to 500 million. We had eaten up from above ground supply 1.5 billion ounces of silver. And yet, if you look at the price chart in 2005, silver was about $8. Even though, so you ask the supply demand question. I mean, if you'd lost that much wheat or that much, oil or any other commodity on the board, and you'd lost, 3/4 of it over a 15-year period, and it was known amongst the commodities people, I doubt you would see a price as low as silver was. But regardless, that's what happened. Now, from 2006 until the last year or so, we've been building it above ground, and we've gone back to about 2.5 billion ounces. There's no perfect number. Some people just make them up. I try to cite all my work, but there's a difference between what the Silver Institute says, Metals Focus says, and CPM Group says. So I try to just kind of give a stab in there where they're all pretty much within a ballpark of that number. If you want to ask, is the supply growing or dwindling, and you look at the above ground supply as the only way to measure it, the answer has been growing. And part of the reason was the Industrial Revolution in China. And when did that start? I don't know. No one has an exact date. You see the early 2000s, and there was a commodities boom, a super cycle. I mean, the Chinese needed copper, iron ore, tin, nickel, silver, concrete, lumber. I mean, you name it. Any commodity across the board was very, very much in demand for what was a build out. 15 years, 20 years, but that's ceased, not come to a zero, but the growth factor is certainly less than it was during the heyday of the Chinese build out. The futures market runs all the commodities. The big question is, what is the key? And the key is that the demand on the investment side the last couple of years has been retail. If you go back to 2020, the demand for silver on the institutional side was 320 million ounces. And if we go back in time and look at the Davos, now better known as World Economic Forum, and Bloomberg's finance guys were there interviewing different people. And they interviewed a gentleman named Scott Maynard, who was the chief investment officer for Guggenheim. And they asked him what's his go-to investment in 2020, and his answer was silver. And they just about fell off their chairs. 320 million ounces was bought in the ETFs that year. Scott Maynard is no longer with us. I'm not saying that Guggenheim bought all of that, but what I am suggesting is it's very unusual to have the rallies that we've had from 2020 till now. And yes, it's gone up and down, but there's been substantive rallies that any algorithm would pick up on. And yet the institutions that run those algorithms don't seem to be playing the game. Because if they were playing the game, the ETFs would be added to like they were in 2020, and they are not. They are draining out. So it doesn't make any sense.
Silver experienced a rebound, settling up by 0.74% at 70152, driven by short covering. This recovery followed a price drop as traders revised their expectations for a Federal Reserve interest rate, cut in light of unexpectedly high U.S. inflation figures. What are your projections regarding the future value of silver, and how does this align with Morgan's perspective on the gold-to-silver ratio? That's it from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.